Welcome to Bitcoin's dance. A halving is upon us. Bitcoin, the world's leading cryptocurrency, operates on a predetermined cycle. This cycle includes an event known as the halving. Imagine a reward cut in half every 4 years. This is the essence of Bitcoin's halving. Miners, the backbone of the Bitcoin network, solve complex puzzles to validate transactions. For their efforts, they receive Bitcoin rewards. The halving reduces these rewards, impacting the economics of mining. This event is not a surprise. It's hard-coded into Bitcoin's DNA. The next halving, expected in 2024, will slash block rewards from 6.25 to 3.125 Bitcoin. The halving's impact reverberates throughout the Bitcoin ecosystem, influencing price, miner behavior, and investor sentiment. Understanding this event is key to navigating the volatile world of Bitcoin. Now, let's explore Riot blockchain. Riding the Bitcoin wave. Riot blockchain is a company that lives and breathes Bitcoin. Publicly traded, its fortunes are closely tied to the cryptocurrency's performance. Riot operates massive data centers dedicated to mining Bitcoin. Their business model is simple: generate as much Bitcoin as possible. The more efficient their mining operation, the more profitable they become. However, the halving throws a wrench into their calculations. Riot, like all other miners, will see its revenue per Bitcoin mined cut in half. This poses a significant challenge: adapt or face extinction. Investors are watching closely to see how Riot navigates this critical juncture. The halving presents a test for Riot, pushing them to innovate and optimize their operations. Their success or failure hinges on their ability to weather the storm and emerge stronger. Moving on to the halving's hammer: impact on Bitcoin. Bitcoin's halving is not just a technical event, it's a seismic shift in the dynamics of supply and demand. By slashing the rate of new Bitcoin entering circulation, the halving constricts supply. This artificial scarcity, baked into Bitcoin's code, has historically driven up its price. Think of it like a rare commodity becoming even rarer. As demand chases a shrinking supply, price tends to rise. However, the halving's impact is not immediate. It often takes time for the market to adjust and for the price effects to fully materialize. This creates a period of uncertainty and volatility. The halving is a double-edged sword. While it has the potential to boost Bitcoin's price, it also increases mining costs. This puts pressure on miners to remain profitable and could lead to industry consolidation. Lastly, let's delve into scarcity's embrace Bitcoin price potential. Bitcoin's price is notoriously difficult to predict, even with the halving looming. It's a complex interplay of factors, including market sentiment, adoption rates, and regulatory developments. However, historical data suggests that halvings have generally preceded bull markets in Bitcoin. In the past, Bitcoin's price has surged in the months following a halving event. This time around, some analysts predict Bitcoin reaching new all-time highs. They point to the growing institutional interest in Bitcoin as a hedge against inflation. Others remain cautious, warning of potential market manipulation and regulatory hurdles. They argue that past performance is not indicative of future results. Predicting Bitcoin's price is a fool's errand. However, the halving's impact on supply and demand dynamics cannot be ignored. It adds fuel to the fire of Bitcoin's price volatility. Section 5. Miners under pressure. Riot's halving challenge. The halving presents a significant challenge for Bitcoin miners, including Riot blockchain. With their revenue per Bitcoin halved, they face a squeeze on their profit margins. Miners with high operating costs or outdated equipment are most vulnerable. They risk becoming unprofitable and may be forced to shut down. This could lead to a shakeout, with only the most efficient players surviving. Riot aims to be among the survivors. They must focus on reducing costs and increasing efficiency. This includes securing cheap electricity and optimizing hardware. The halving tests Riot's resilience and the entire industry. Section 6. Navigating the Storm, Riot's Post-Halving Strategy. Riot blockchain is not standing still in the face of the halving. The company has been actively preparing for this event, implementing strategies to mitigate the impact and emerge stronger. One key focus is on securing low-cost electricity. Riot has strategically located its mining facilities in regions with abundant and affordable power, such as Texas. Another priority is investing in the latest mining hardware. This ensures that Riot can mine Bitcoin at the lowest possible cost per unit, even as the block rewards are halved. Riot is also exploring diversification opportunities. This includes investing in other blockchain technologies and developing new products and services related to the Bitcoin ecosystem. By focusing on efficiency, innovation, and diversification, Riot aims to navigate the halving successfully and solidify its position as a leading Bitcoin mining company. Section 7. The Bitcoin Crystal Ball. Predicting future trends. Predicting the future of Bitcoin is a notoriously difficult task. The cryptocurrency market is known for its volatility and unpredictability, influenced by a myriad of factors. However, several trends suggest a potentially bright future for Bitcoin. The growing institutional adoption of Bitcoin as a store of value and hedge against inflation is a positive sign. The increasing global awareness and acceptance of cryptocurrencies also bode well for Bitcoin's long-term prospects. More and more individuals and businesses are embracing digital currencies. Furthermore, the ongoing development of the Bitcoin ecosystem, with new technologies and applications emerging, adds to its potential for growth and innovation. While challenges and uncertainties remain, the long-term outlook for Bitcoin appears positive, driven by these emerging trends. Section 8. Beyond the halving factors influencing Riot's future. While the Bitcoin halving is a significant event, several other factors beyond Riot's control will influence its future success. Understanding these factors is crucial for investors. Regulation remains a key concern. Governments worldwide are grappling with how to regulate cryptocurrencies, and uncertainty persists. Changes in regulations could significantly impact Riot's operations. Competition within the mining industry is fierce. New players and technological advancements constantly emerge, putting pressure on existing miners like Riot to stay ahead of the curve. The overall health of the global economy also plays a role. A recession or other economic downturn could dampen demand for Bitcoin, indirectly impacting Riot's profitability. Investors should consider these broader factors alongside the halving's impact when evaluating Riot blockchain as an investment opportunity. Section 9. Expert Opinions. Weighing in on Riot's trajectory. Expert opinions on Riot. Blockchain's future vary, reflecting the uncertainty surrounding Bitcoin and the mining industry. Some analysts are bullish, citing Riot's strong position and growth potential. They point to Riot's strategic investments in mining infrastructure, low-cost electricity, and efficient operations. They believe these factors will enable Riot to thrive even in a more challenging post-halving environment. Others are more cautious, highlighting the risks associated with Bitcoin's volatility, regulatory uncertainty, and increasing competition. They advise investors to proceed with caution and consider the inherent risks. Some experts recommend a wait-and-see approach, observing how the halving plays out and how Riot adapts to the new market dynamics before making any investment decisions. The diversity of expert opinions underscores the complexity of evaluating Riot's future. Investors should conduct thorough research, consider multiple perspectives, and assess their risk tolerance. Buy or buy? The verdict on Riot blockchain. Investing in Riot blockchain post-Bitcoin halving is complex. It depends on individual risk appetite. There is no one-size-fits-all answer. Risk-tolerant investors might find Riot appealing. Their strategic initiatives could lead to returns, but proceed with caution. The halving's impact on Bitcoin's price is uncertain. Regulatory changes and competition could impact their future. Riot might not be right for less volatile investments. Riot's fortunes are linked to Bitcoin, a speculative asset. The decision to buy or buy rests with the individual investor.